2023. This is our year end for Texas Vestments. We ended the year at 6.87%, which is under our bench. The bench was the Dow, and it finished the fiscal year at 9%. So didn't beat the bench, which is not an awesome thing, but not terrible. So let's go through kind of what we have right now. IPG, 4%, Rogers, Entergy, Enbridge, Coca-Cola, Paychex, Corning, Medical Properties Trust, and Regions Financial is our largest holding currently. Right now, we're 23% cash. Much rather be closer to the 40 to 50%, but again, 23% is not horrible. As you see, we have two missing boxes here. We did sell out of our Merck and out of who else, but either way, we have to replace those two, and so going to reshuffle our basket of stocks and get into some new positions soon. All right, going through the individual stocks. IPG currently up right about 4%. We do have the option to sell some options to exit this position, so we'll look at doing that. Put a little bit of cash in our pocket. Rogers, we're currently down about 5%. Long time holding for us, but doing fairly well. Enbridge, we are currently down almost 10%, but not quite there, so we don't have a buy or sell signal yet for them. Coca-Cola down almost 9%. Same thing, don't quite have a buy or sell signal yet. Merck, this is the position that we exited. Did get a little bit of profit on that one, so looking to replace the medical sector stock, and we'll be doing that on next month. Paychex down about 5%. Still decent holding for us. We only have about 40 shares, so we may look at adding more, but it really depends on what our cash position is once we replace Merck and Southern Copper, which we also sold for a bit of profit this past month. Regions, again, largest holding for us right now. We're currently in at $25, which is not an awesome place to be, but not terrible. We are currently down about 27%, so we'll definitely look at doing a new analysis on that company just to see kind of where we are and where we think regions can go. Corning, currently down about 20%. Again, we are, well balanced in that position. Don't really need to add any more, but we'll do an analysis to see if adding more will help lower our price on it. We're currently in at 39. I think right now Corning is somewhere around 31, 32. Medical Properties Trust, our second largest holding, down, and our largest loss right now, 35%. But it is starting to come back. We're in at $14 right now. The price is right around 9, and so we're just going to continue to monitor it. I did an analysis, I think probably 3 months ago. So looking to do a new analysis on Medical Properties Trust to see kind of where it is. I don't think we have any premium on options right now, but we'll definitely monitor that as the price continues to move higher. All right, Entergy. We are currently down 6, almost 7%. Small holding for us, and we are fairly well balanced there, so nothing to add or take away. And then these are our orphan stocks. We did sell one of our orphan stocks, which was SLVM. I think it's Salvo. Sold out of that one. We still have Energy Transfer, Macarich, Annaly, and Organon. And so we'll continue to hold these. If we do need cash for whatever reason, we can always sell them, which is great. Otherwise, they'll just keep throwing off dividends. We just received the dividend from Energy Transfer for something like 31 cents or something like that. And that's been paying out since, 2015, 2016. So definitely going to hold on to that. I do want to take a look at our current transactions. No, not current transactions. This is something that has really given me some real hope here. Um, Looking at our, this is what, going back to going back to 2016. We're sitting at $250 a month, which I'm really happy about. It's been at around 200 a month for a long time. Our 1 year profit, however, is $550 a month. And that's really good. And then our 3 year profit is almost 480, 490 a month. Looking at the returns, 8% return on average for the last 7 years. So really happy about that. 8.5 and then 11% for the last 3 years. And so even though we missed our bench this year, I really am happy with that 8% return. And if you want to be cocky about it, you can even say almost 11% over the last 3 years. As far as our um, I want to say standard deviation, but uh, let's just say our risk profile, right? Our risk profile for the last 7 years is plus or minus 2%, which is uh, it's not bad, not bad. It just means that month over month we have the possibility of gaining 2% or losing 2%. Over the last year, because we were in this low risk portfolio, you see there was only plus or minus 0.5%, which is really good. But that means that we don't have large returns, right? And then over the last 3 years, you see it's a little lower at 173. And so just to kind of show exactly what that looks like, statistically, based on this plus or minus the risk, right? There's an 84% chance month to month, right, over the last year, right? 84% chance that we're definitely going to make money. No question about it. And then over the last 3 years, there's a chance of us gaining 2.5% or possibly losing almost 1%. And then over the last 7 years, there's a possibility of us gaining 3% or losing roughly 2%. And so what this means to me is just based on these numbers is that on average, month to month, even if we do lose, we're almost guaranteed to lose less than we will win. And we can kind of see that illustrated here, just looking at the numbers, right? Kind of go through here. You can see all these are pluses, right? There's one minus, and it's a negative like zero point zero 0.04. That was, we lost $24 that month. But every month we're making money. We did have a loss here in May of 2022 of 2%. And then the question is, do we have any gains of more than that? And we see some back here in 2021, right? Even April 2021, there was an 8% return. And then March, -3, a small -8. But again, all these are pluses, right? 3% there. And so this is what investment is about. We see a -9 there, but I am certain that we beat that. There we go. See that? March 2017. So, it's small returns. There are going to be some losses, but the gains make up for the losses. And that's what it's about, right? This is long-term investment, investing. I have updated this chart. Oh, okay. I must have done- Go down now. See what it looks like. Oh, Something wrong. Like it's stuck. Yeah, that's really weird. Try again. Okay, so that is June. Just couldn't see it. Okay, so yeah, so again, just as a scatter plot, and so you see the outside gain here, and then we have a loss here, right? But for the most part, all these returns are right in, right? And so what we want when we talk about risk profile, when the risk is low, we see lines like this where they're all hugging the zero, right? And then when risk is high, we see these outsized gains, but we also see some losses, right? And that's how it works, right? Risk is the potential to win and the potential to lose. And it's very hard to have a high chance of winning and a low chance of losing. Typically, if you have a higher chance of winning, you also have a higher chance of losing. And so playing with that risk profile is really what it's about. And we've done really well with that. Like I said, we do have some losses, but the gains outweigh the losses by quite a bit. So I think that's it. Like I said, this coming month, we're going to reshuffle our basket of stocks. So excited to see some new companies in the mix. We may be losing some. And again, we are going to be replacing our health sector stock, and we'll be replacing our basic sector stock. And we may actually look at adding to our paychecks position as well as our corn